And we are live. Welcome back to ENTP Life. And this is, I guess, episode 2 of Stock Trading Basics or Stock Trading 101. I guess that's what it's called, Stock Trading 101. Just to give you a background of myself, my name is Carl here, founder of ENTP Life. Here on ENTP Life, we mostly talk about real estate, business, and then the other things that I'm interested in. And we tend to focus a lot on how to make money and really how to improve your overall financial situation so that you can live the life that you truly want to live. So it kind of leans towards like the FIRE movement, that financial independence, retire early. We also lean a lot towards creating financial literacy or teaching financial literacy here in the United States. And I think that can expand a little further, especially when you're dealing with stocks, since the US stock market is heavily traded throughout the world. And that pretty much is it. So this series kind of came about because I would post from time to time some of my stock gains or stock tips on all my social media platforms, Facebook, Instagram, here on YouTube. And people would of course ask, hey, how do you make money? Now, quick disclaimer, I am not a financial advisor. I am not a registered broker. I'm none of those things. So whatever I do say or whatever I do recommend, it's just my opinion, right? And you guys can make whatever decisions you want for yourself as to whether or not this is something that you want to pursue. Of course, there's risk. Anytime you're putting your money to work, there is risk. Anytime you walk out the door, honestly, or even inside your own home, it doesn't matter. There's some risk to you, but you just need to understand that is your risk and your responsibility, not mine. So that being said, stock trading is by far the hardest thing that I've ever done. I've opened home care agencies, I've opened staffing agencies, I had a fashion tech company, I pledged in a fraternity, and in my opinion, out of everything that I've done, education-wise, work-wise, stock trading is the hardest on me mentally. You have a tendency to always want to be right. You have a tendency to always want to make money, but not every day will you make money, and you won't be right on every trade that you make. And that's kind of hard to deal with, especially for someone who is inclined to trade stocks, because stock traders tend to be a little more risk tolerant, a little more stubborn, headstrong, and the two kind of don't mix. So I always tell people who are starting to get in stock trading, which is making income from buying and selling stocks, not just long-term investing, but stock trading, speculation. That is the hardest thing to do, and chances are you're going to fail. I started trading in 2009, right after the economic collapse. I started learning how to trade stocks in 2008 as the market was collapsing. And I started trading in, I believe it was like February of 2009, right before the bottom in 2009. So I got to see what it looks like when the market is crashing. And I got to see this entire rally that we've had since 2009. The first few years of trading stocks, very difficult, quit. Admittedly, I quit for some time. And I would get involved whenever there was a lot of volatility, because I knew that was the environment where I thrived. I like to kind of get quick results, especially as a day trader. The majority of my experience was day trading. And day trading is, in my opinion, a dying art. It's getting taken over by the machines. A lot of algorithmic-based, a lot of algorithmic-based trading, definitely outperforming the human trader. And I think, it's becoming harder and harder to be successful day trading. And my current approach is a swing trading approach, meaning I'll buy into a position, or I'll buy a group of stocks for days to weeks at most, looking for short-term movement, looking for short-term signals in the market that a stock is moving in a direction one way or another. I tend to have a long bias, which is buy-side biased when swing trading. When day trading, I'm kind of short side biased because downward activity is a whole lot better. And that's pretty much how I view that. Now, I just want to make sure that this is visible on the platforms that I'm broadcasting to. So if anybody has any comments or questions from the live broadcast, I think that should kind of show up here on StreamYard. It's my first time getting acclimated with this. So I want to make sure that the communication is there between me and whoever is present. So if people are watching, please chime in and let me know that you hear me, that you see me, and that this is working, right? Because I've been talking for 5 minutes, so I want to make sure that this is functional. Are we working right now? So please, anybody who's paying attention, let me know if we are in fact live, so that I am not wasting my time here. Yes, I am live. Okay, I see it at least on YouTube here. I'm gonna just check on my cell phone if there's anybody tuned in, checking this out, just to make sure that we're not in a stupid place. Okay, I see everybody tuned in, trading. We're live. You're loud and clear live. Okay. For whatever reason, I'm using the StreamYard service, and I can't see the comments that are coming in. And I've seen other people use this to draw comments. Well, I don't know how that works. So I will view my comments on my mobile device as they come in. If there's any questions, I'll try to answer them. Right below on StreamYard and see if they post. Can you see this? Maybe because I'm streaming to both Facebook and YouTube, I might be having that problem. But we're live and we're good. So with that being said, I guess we'll just dive into it. So I gave you my background, trading now 11 years, and you can make some substantial money. I try to aim for about $500 to $1,000 a day as an average. So you're looking at anywhere between a $10,000 a month on good months to more than that on really nice months. And my current buying power is about $700,000. That was a weird phrase, about $700,000, and that's based on an initial input of $150,000. So, or like that's like the baseline capital. So right now it's more than that. So my buying power is higher. My typical exposure in any particular trade is going to average between $40,000 and $60,000 per full position, and I don't really carry more than about $350,000 to $400,000 worth of stock at any given time. That's where I'll be like fully maxed out. I might take advantage of a day trade here and there and use that extra buying power, but overnight I usually keep it at that 2-to-1 ratio. And that works out well for me. Some days I may be up 10 grand. I had a 10 grand day the other day. Last month I was up about $30,000, and things have been kind of moving pretty good. And it's not always like that, so don't expect it to be that way. I know some of you are tuning in from other countries where the earning potential is low. Stock trading could be a very good option for you to even make a little extra cash or even replace your job earning in US dollars. So I highly encourage it. It's not for everybody, but there's plenty to learn here, okay? So today what we're gonna be covering is my favorite trading platform, especially for my style of trading, which is swing trading. And that platform is Thinkorswim. Thinkorswim was an independent stock trading platform before they were acquired by TD Ameritrade. So now it's under that TD Ameritrade umbrella. It's fantastic. I like the way the charts look. Whenever you see me posting my my gains or charts, it's coming from Thinkorswim. All right. Even when I was at the day trading firm, I would trade on another day trading platform, Lightspeed, but all my analysis and day-to-day and was always on Thinkorswim because the charting is good. Like it has some of the best charting that I've seen on trading platforms. And as someone who's trading, you're typically going to be using technical analysis to make your decisions, which is looking at the chart, analyzing the stock's price action, moving averages, and a bunch of other indicators. And it's important that you have a system that is visually appealing, that has a great user interface. And Thinkorswim is that. I had requested people reach out to me so that I can invite you to Thinkorswim. I get a commission for that, right? Obviously, I want to earn some money. So, if you guys are still interested, just email me at any email address that I have or in the comment section below. I'll send you that invite link. And I believe we both get money if you sign up with that link. If you want to sign up independently, I don't care, go for it. But, if you want to throw me a bone and give back because I'm spending time with you, fantastic as well. It really doesn't matter. But we're going to be walking through the initial setup. Last week, or not last week, maybe like 2 or 3 weeks ago, we did the first installment of this, which is kind of a high-level overview of stock trading and what to expect. Today, we're setting up the trading platform. It takes some time to do so. And if you haven't already downloaded it, make sure you download it, come back, watch this video, and just follow along so you set it up the same way that I have it. That way, if we're ever talking or if I'm ever sharing a chart that I really like, your setup is the same as mine, so you'll be able to see and digest it the same way, right? That's the idea. I hate looking at other people's setups because I have to figure out, what are their moving averages, how their screen is set up. And I like the way that I set up my screen. And if I'm going to be teaching anybody how to trade, I'm going to teach them to set it up like mine. So I'm seeing the same thing and not kind of spending and wasting time trying to figure out what their setup is. All right. But obviously you could customize your platform to your liking. It's just going to be more difficult for me to follow you and kind of make suggestions or tell you how to adjust your screen. Okay. Now, enough of the introduction stuff. At this point, before I get started, any questions that I could cover based on just general information, I'm going to go through the setup. We're going to end at 9 o'clock, and maybe 15 minutes before ending or whenever I'm done kind of going through the steps, I'm going to go into Q&A because I'm sure people are going to have tons of questions. So we'll go into Q&A, and then I'm going to sign off at 9 o'clock. Now, the setup, you can obviously rewind, watch this over a few times just so you can follow step by step. I'm not going to wait for people to download the platform and figure it out and whatever the case may be. There's going to be questions when you're downloading the Thinkorswim, and I think it's important for me to cover that real quick. So they're going to ask, do you want a margin account? Say yes. Let them know that you're interested in potentially day trading. Let them know that you're going to be trading options, and let them know what your experience level is. Don't say that you're very experienced, but don't say that you're a complete rookie either, because they may limit your margin account if you present as too green. So kind of pick your choices wisely, because obviously they're gauging how risky you're going to be. All right. It's a lot of information, your employer information, all that. And then you can download the platform. And then you're going to have two features. You're going to have live, which is real money, and then you're going to have paper money. Okay. Paper money is what we're going to be practicing on from now until you prove that you're consistent and that you're ready to start trading real money. For you cowboys out there who are ready to start trading real money from the beginning, great. Be prepared to take some losses and have your heart pumping. I advise everybody start with paper money. That's how I started. That way you get familiar with how to place orders, how to manage your orders. testing a strategy that really fits you. And then when you're confident in trading paper money, you're showing that you're making some gains, you can move on over to live money and start putting your money to work. Warning, when you move from paper to live, it feels a whole lot different. It's like going from simulation to being shot at, okay? You can play war in boot camp, but when you're in war and there's bullets flying past you and your life's at risk, it's real, right? And it's the same way when it comes to your money. People, especially people who have firm attachments to money. Done with that, let's go and take a look at the platform. So I'm gonna make this big. I'll make it full screen. Okay, so I'm gonna switch on over and as I promised, let me go back to I'm sorry, man, I'm new at this live stuff. So I'm a little green, not so good. Okay, so I wanna address any questions. Okay, Darius Smith, do I pick random stocks or do I say with a few select stocks? I will look at about 600 to 700 stocks per day. And they're split between, I look at all of the S&P 500 stocks daily. Then I look at the IBD 50, which I maintain my own watch list of Investors Business Daily IBD 50. They use the Cant Lose method in determining what are the best 50 stocks that are going or that are showing growth. So I always watch those. Those are a big piece of my strategy. And then I have my group that I belong to, which is Bread and Butter Trades. One of my buddies started that. It's like a Discord group or a Slack group where we kind of throw out trading ideas. And I'll build a list of stocks that are in play that other people may see. I know some of the other guys go through the Russell 2000. They draw their inspiration from wherever they draw it from. There's, thousands of stock symbols to trade. I'm constantly looking at different stocks. I don't look at anything. I'm not like married to any one stock that I trade regularly. I might trade the S&P Spider ETF off of key levels only. That might be one reoccurring trade. I may go to the same symbol more than once because stock was consolidating, broke out, I took a profit, it comes back to a price level 3 weeks later that I like, I'll get involved again. But I'm continuously looking at stocks every day that fit the criteria of my trading style. And when they're in play, I'm in play. Okay, I hope that answered that. Darius Smith, I'm not sure about that. As far as, so you don't trade just Amazon, Facebook? No, absolutely not. I don't just trade Amazon, Facebook, Microsoft, and that's it. I mean, there's thousands of stocks out there. I'm not limiting myself to a group of 4 and the leading 4. So that's not me. And I don't think that TD Ameritrader only lets you trade 30% margin because I'm trading 400% margin at times, So I don't know. I guess it depends on how much capital you have and whether or not you elect it to be leveraged up. And most platforms will let you have 2 to 1 at minimum for overnight. So I don't know why 30% or how 30% came into play. All right. There's a 10-minute delay on the comments. So put the link in here, Carl. Sure. Thank you, Randy. And thanks for checking in. Randy's about the money. Randy's about the money, which is cool. So the link is in the comments. So you can pull on that, and then I'm switching over to setting up the screen. So the first thing when you sign into Thinkorswim, and I just have my account information blocked out. I don't really care about, and how much money I got. Right now, my account balance is 190K. But my account number matters. I don't need you guys robbing me. All right. So yeah, so when you set up the account, you're going to be on some screen like this, right? Or not this screen. You're going to be on like some basic news screen or something. And what the first thing that you're going to do, you're going to go over the charts. All right. Once you go on over the charts, you're probably going to have nothing on your chart. It's going to be blank like this, right? So first thing I want you to do is you're going to go into this top right corner where this rectangle is, and we're going to set up side-by-side charts. Now you see there's two charts here, one on the left, one on the right. On the right side, I always have the S&P futures or the SPY, which is the ETF of the S&P 500. The reason for that is because I always need to know what is the general pulse of the market. Are we in an uptrend? Are we in a downtrend? Are we moving into areas of resistance or where the market may not go higher? Are we moving into areas of support? I'll explain support and resistance and moving averages and all those things later. But for me to be making my decisions real time, I need to know what the hell is going on in the general market. All right. When it comes to the left side is the stock that I am looking at, and I'm always comparing the stock that I'm interested in with the general market, right? And I go through a process of figuring out how is this stock comparing to the general market, and then how is this stock behaving overall as a traded equity, all right? So now that we have this side by side, this is how I prefer it. Now, look, you could set it up where you're looking at 50 charts at once or whatever the case may be. I think that's too much. They're too small. I wouldn't recommend that. I do it side by side. On the right side, /ES. That's the S&P 500 futures, okay? This is the options contracts for what the S&P 500 or to have exposure to the S&P 500 stocks in one bundle, all right? I don't trade the S&P futures. I only view the S&P futures to understand what is happening in the general market. I draw in my trend lines, etc. If you want to zoom in, you highlight the area you want to zoom in, scroll to the right, and you'll get a closer look. Another thing is, I don't like seeing the screen black like this. For whatever reason, I don't like it. It's not attractive to me. So I'm going to show you exactly how I set up the appearance of my charts so that it looks to me as something that I would like to read. I can see clearly. The black screen, for whatever reason, I don't like it. So you're going to right click on the chart, not on the bars, but on the chart itself, on the background. You're going to go to Style. You're going to put, what am I doing here? Settings for the style. You're going to go to Appearance, Background, change it white, Apply. And then the fill bars, fill them up, right? So that you can actually see it. Apply. You're then going to go to Equities. You're going to turn off Show Extended Hours of Trading Session. That's going to show you the overnight when you're looking at it intraday. To me, it's choppy, it's confusing. I don't like the way it looks. If I need to see the extended hour activity, then I'll go and turn it on, right? So if you want to see how stock traded overnight, which is usually not much at all, you can go check it out. There's very little data there. Don't see the reason for you to check it out unless there's earnings or something along those lines. But even then, the activity overnight during earnings is pretty thin. So it's not reliable data. So turn off Show Extended Hours, Apply, and OK. All right. Now, you can save this style and name it whatever you want, white background, etc. Because when it's time to do this screen, you just copy it and redo it. All right. Next thing that we're going to do, we're going to add what I feel are the most important studies that should be on your chart at all times. And what I mean by studies are indicators on the chart that tell you something special about what's happening in the stock's price action. So to add the main studies that I have on my charts all the time we're going to add simple moving averages, okay? And I'll explain what those are in just a second. So to add that, you're going to go to Studies, Add Study, not a quick study, but Add Study, Moving Averages, Simple Moving Averages. Once you select a simple moving average, I'm going to zoom in close. There's going to be a blue line. This blue line represents the 9-day moving average. That's the default one that they give you. I don't care about that. We're going to edit it. Right click it. You're going to pull up this edit box. Edit. We're going to change it to green. And we're going to go up to this length as far as inputs are concerned. And it's going to be the 200-day moving average. We're going to hit apply. That's going to change its color. And of course, it's going to change its location. Now, I'm going to answer this question because I'm sure it's on your minds. What is the 200-day moving average? The 200-day moving average is the average price for that stock symbol that you're looking at for the past 200 periods. If you're on a daily chart, which we are, and that's indicated by D here, that is the past 200 days of trading activity. If you're on a 5-minute chart, it is the past 200 5-minute intervals, all right? But on a daily chart, the 200-day moving average represents the 1-year average price. There's 200 working days or trading days in a year. 200-day equals the 1-year average price. A lot of traders, institutional day traders, they use that to set a baseline. It is the baseline price for that stock for the past year. And oftentimes there's going to be activity at that level. Another thing about the 200-day moving average is I typically trade 90% of my trades are going to be in the direction that the stock is relative to the 200-day moving average. If the stock is above the 200-day moving average, I will have a buy-side bias because it is uptrending and in a growth cycle. If the stock is below the 200-day moving average, I am more inclined to have a short side or downside or bearish side bias on that stock. Sometimes you hear people talking stocks, they're talking bulls and bears. Quick note, bullish is you're expecting the stock to go up in price. Bearish means you think stock prices are going down or that stock price is going down. So if you ever hear about people talking about bulls and bears, who's in control, people who are buy side are bullish, stock is going up, the bulls are in control. Selling, downside bias, bears are in control, okay? So the 200-day moving average should be on your chart all the time. And those moving averages come into play on different time frames too. Algorithms are set up to them. Human beings are conditioned to trade off of them. So you should have them on your chart, okay? The next moving average that we're going to add, once again, you're going to go back to Studies. Add Study. Moving averages. Simple moving averages. Simple moving average. Again, it's going to be the blue line. We're going to right click it, edit. We're going to choose the color purple. Okay. Apply. And then we're going to change this to the 50-day moving average. Apply. Why is the 50-day moving average important? You're going to see the 50-day moving average come into play all the time as well. It's a tighter time frame, but 50 days is 1 quarter. So that is the average price of that stock for the past quarter. Once again, if you're playing on a shorter term basis and you want to revert back to the average price, you know the average price for the past quarter or the past 3 months is the 50-day moving average. We're adding another moving average. We're going to add the, what's this thing called? The Studies, Add Study, moving averages. I know it's getting boring. Simple moving average. Right click it, edit. We're going to change this one to the 21 day. Why 21 days? What does it represent? The average price for the past month. Okay. We're going to hit apply. That one's going to stay blue. And the final moving average, we're going to add on the other side of the chart because I really don't care about that moving average on the right side. We're going to go to studies, save study set, and we're going to name this moving averages. This is going to save you time when we set up the left screen. Okay, save. So now on the left side, I'm just going to insert everybody's favorite stock, Apple. AAPL is the stock symbol. Now you see my left screen is still black, doesn't have any moving averages. I need to save the style, which is going to be white background. And we're just going to right click it. And for the sake of saving time, we're going to load that style. See, for me, it's my Carl Standard, but white background for your sake. Then we're going to load the studies. Moving averages. Now, we already have our three. The 200, the 50-day, the 21-day, as my boy Jeans calls it, the 21 Savage. One more moving average is getting added to the left side, okay? Studies, quick, or no, not quick, add. I'm sorry, I'm being delirious. Add moving averages, simple moving average. It's going to pull up another blue one. You're going to pick the blue one that's closest to the stock, right? And we're going to change it to the 8-day moving average. Why the 8-day? I really don't know. It just comes into play, and I've been taught to pay attention to the 8-day moving average, but it almost represents the past week and a half worth of trading activity, okay? Or like looking back at the past 7 days of trading activity. Even though it's typically 5 days in a trading week, it goes back 8. This line comes into play frequently, so I have it on my chart, and that's it. I don't really care about that too much for the S&P 500 or the S&P futures, so I don't have it on that side because I'm more concerned with the previous day's action and recent levels. Okay? So now that we have the look and feel of our charts, now these red lines are just my trend lines that I have drawn in. And what I mean by trend lines, I guess is a good time to talk about it, but let me remove old drawings. Trend lines are important, okay? Right here, Apple is clearly in an uptrend. You can draw these lines, and believe it or not, once a trend has been established, other traders, because remember, that's what you're doing, you're trading against other people. Other traders are using the same indicators, using the same theories, all right? So they're making their decisions at the same time. So if the majority of people think that this is an uptrend, have this trend line on their charts, they're going to be taking actions according to these symbols and these key indicators on their charts. So you should have them marked out on yours, okay? They're going to be trend lines. They're going to be areas of support. They're going to be areas of resistance. I'm going to teach that in greater detail, maybe in this lesson, depending on how quickly we move along, or in our very next lesson, okay? So this trend line, just as an example, in Apple's been in an uptrend for, I don't know, the past 20 years. So Apple's been in an uptrend, okay? So it's making new highs, a higher low, making new highs, a higher low, but it keeps tagging this trend line before it makes a new high. But you see on this day, it broke the trend line. And when it broke the trend line, it had a little more downside action than usual, but also didn't make a new lower low. The uptrend is still intact because this low did not undercut this low. And Apple is back off to the races, making new highs, okay? So it's important for you to have these trend lines because right here, this is a major signal that the trend may be turning once that trend line is broken. But Apple came in, the buyers came in, gobbled up some more Apple, and the trend is still intact, okay? So it's important for you to have those trend lines. Now, to draw trend lines, you're gonna wanna have a drawing tool set up. And so what was once an arrow will become a drawing tool, okay? And then you'll be able to draw trend lines however you want. Now, this trend line is gonna allow you to draw horizontal trend lines, diagonal ones. But if you can see, I'm not sure if you can see it, you could also measure like how much a stock has moved, right? And it gives you all that information. So from here to the highs of Apple in the past 2 weeks, Apple has gained 25 to 26% in value, has moved $92 a share, and that was over a 9-day period, okay? So if you can predict these sort of things consistently, you could extract 10, 25, 30% moves. And you could even calculate like what sort of movement does this stock have on an average day or in a strong uptrend. And I'm gonna close this door because this noise is bothering me, so 1 second. So I'm getting like roadside noise. Hopefully that's better. All right, so I always have this trend line stick drawn onto my charts just because I need to always draw trend lines and measure moves and that sort of thing because my predominant strategy is technical analysis, all right? Now, another thing that you're gonna notice is this right here, this one symbol next to the input field. This allows me to link this chart to my watch list, right? So this list is my current holdings. These are my option positions here up top. These are my stock positions here. Some of these are option positions to protect my stocks. Some of them are to stretch my money a little further or give myself a little bit of flexibility. I'm going to explain stock options versus direct stocks or equities in another conversation. That's a full lecture in itself. But I do trade predominantly stocks, and a minority of my money is going to be in option positions for protection or to extend. Like if I'm almost maxed out on my account and I only have like, I don't know, $5,000 of cash buying power available, and there's something that I really like that I can't just, if it was a $300 stock, I might have to buy options because I'm not going to just buy 10 shares or 15, 20 shares or something like that. I'm not going to do that. So I'll take an options position to stretch my money a little further, and I can explain that, but that's for another lesson. All right. But one thing that will allow you to go through your stock list or your watch list a whole lot quicker is by linking your watch list to your left side chart. And to do that, this number is number 1, this number is number 2. You're going to select number 1. That means that they're going to be now synced. So rather than entering Apple, Microsoft, Costco, whatever it is that you're trading, instead of entering them one at a time, you can just go to your list and with your cursor or the arrow button, quickly filter through your stocks, okay? Rather than typing in each symbol, right? So throughout the day, I'm filtering through stocks, looking at the price action, looking for setups, like the design of the chart or the appearance of the chart, so that I'm able to quickly identify what stocks are coming into play. So let me just show you, let me point something out to you. This stock is an uptrend as I defined before. Look what happens in Bill as the stock retreats to the 50-day moving average. It trades down there and closes up here. It trades down there again and touches that line and closes up here. That is not a coincidence, okay? Oftentimes you'll see stocks come directly to the 50-day moving average and bounce. Come to the 200-day moving average or close to it and bounce. Coming to the 50-day moving average, finding support, okay? These things are not a coincidence. They happen over and over and over and over again. Odd C, direct touch of the 50-day moving average, now bouncing. I'm in this stock, long, okay? ADSK, dancing off the 50-day moving average, starting to turn again. That's why it's on my chart. It's something that I look for. It's one of the clues that I look for in an uptrending stock that I may be interested in buying. But for you, when you're looking through your stock list, you could go to your watch list. This is when you first set up, this central bar is gonna be watch list. You're then going to go from watch list and you can select whatever index you wanna see. Jesus. The S&P 500. I sorted in alphabetical order, and every night I scroll through the S&P 500 looking for stocks that are exhibiting behavior that I like. This stock is trading below its 200-day move, its 50-day moving average. Not a good sign. This stock pulled into the 50-day moving average and bounced. Pulled into the 50-day moving average, and from here to here bounced 10% in 7 days. Okay, so if you had $50,000 parked in this trade, buying in this area, you would have made $5,000 in a week. All right, just off of buying off that moving average. Sometimes it's that simple. So either way, this AMD, right? Line of support, line of resistance, had a hell of a move, or BMD, I'm sorry, has been breaking out, trading nicely. All right, trading off of its 8-day moving average in this case. The 8 is in control. So either way, on a daily basis, I scroll through these charts, I mark up the charts, I look at key levels. This stock bounced directly off its 200-day moving average for a 5% gain in just a few weeks. All right, so these are the 500 leading stocks. They're a mixed bag of energy, technology, industrial, factories, service-based like ADP, right? All of these US companies that are highly traded, large companies, huge companies, it gives you a general sense of what is the overall economy, all right? The big banks, Bank of America, Wells Fargo, JP Morgan Chase, Morgan Stanley, Goldman Sachs, all traded in the S&P 500. Apple, IBM, Microsoft, all from the tech side. Another index that a lot of people will follow, especially since tech has been in control of the market for freaking my lifetime, is the Nasdaq, okay? And if you wanted to use the Nasdaq, since you're gonna be trading mostly tech stocks, if that's your opinion, you, instead of having the S&P futures on the right side, you might want to have the Qs on the right side, or /NQ for the Nasdaq. Oh, sorry, for the Nasdaq futures. Okay, I trade the S&P 500. It's 500 stocks. It's a more well-rounded index. The Nasdaq kind of is tech heavy. All right. So if you're going to be trading mostly tech stocks, then you should have the Nasdaq on your right screen. If you're going to be industry agnostic and trade whatever, then I would recommend S&P 500. I wouldn't recommend the Dow Jones because the Dow Jones is only a handful of stocks. It's too small, not broad enough. They typically all trade together anyway. You'll sometimes see a divergence between the two, but they tend to trade similarly, and they also have overlap in stocks that create that index. But the S&P 500 is more rounded. You know, you could also have the Russell 2000 up there if you wanted, even more stocks to be included. But I like the S&P 500, so I recommend that you do that. Now, you can also create your own custom watch list, right? So some of my watch lists that I've created, the bread and butter from the group, I have this default list. Then I have my IBD 50 that I update on a weekly basis, because sometimes IBD pushes stocks in and out of the IBD 50. So I go through those every single day. And then I have my, that's why I have a watch list, personal. These kind of came in by default. In March, while the market was falling apart, I created a relative strength list, stocks that behaved well during the coronavirus crash. Okay, those were important for me to look at, because when the market turns, typically those that were relatively strong to the market are the first to run out of the gates. Securities to watch, I think that's something that's created. I don't think I created that. Signs of turning, once again, in March, I was stalking the market. The market was going wild. I wanted to make sure that I had a list of stocks that were behaving well, that when the floor gets put in the market, which was right around here, right, that I can start leaning and being more buy-side biased on those particular stocks that were relatively strong. Then I have like my today list, right, where I like how they were looking from, like, that's where I kind of filter down what looks good. And it's not really just on a day-to-day basis, because this might be stocks that I'm looking at for the week. So ADSK, I already added that position. Algen, I added today, coming right off the 50-day moving average. I don't know if Stefania, who I spoke to yesterday, is watching, but if she is, I told her yesterday that this action on Algen most likely is going to produce a follow-through day. It also got above this trend line. I called this out in the bread and butter group today. From maybe, let's look at it on an hourly basis. In the first hour of the day, it opened here, I bought this. And in an hour, it moved from $290 to $300, $10 a share. And I have, what, 200 shares of this. So in 1 hour, up $2,000, okay? Sometimes it is that simple. And it's consolidating and looking like it's gonna go higher, and it got over this trend line. I like this. I told her I liked it yesterday. If people were paying attention to me in the group, which I called it out, they could have gotten a nice rip on options on the stock in just 1 hour's time, all right? This is how beautiful the stock market is. But this list, my today, is where I condensed down stocks that I like from all my other lists, so that I'm a little more focused in the day, scrolling through between what's on today and what is on my current positions, because I'm monitoring how my stocks are performing in the day. If I need to make any adjustments, these are stocks that I own, so I'm looking at them, of course, to see how they're behaving. And then I filter between this watch list and my what's in play today, or what I think may be in play today. And I'm just cycling through, waiting for things to approach their price. The majority of the movement is going to happen in the first 2 hours of the trading day, from 9:30 to about 11:30, 12. The lunch session is from 12 to about 2 p.m. So there's nothing to really look at. Even if you look at stocks, let's just go to the hourly chart, or let's 5-minute chart. From lunchtime, this is lunchtime right here, 12 o'clock to 1:35, this stock just sat in a range. Algen sat in a range after the initial move in the morning. This one kind of just turned over, didn't trade in a range. This one kind of chopped around for the day. But for the most part, the activity goes down at lunch from 12 to 2, and it comes back in from about 2, especially 3, 3:30, 4 o'clock. You know, the first half hour of the day and the last half hour are the most volatile and most active, and that's where people are making their decisions. So there's a lot of days where I'm busy midday. I just adjust my positions first thing in the morning. Sometimes I take profit. Sometimes I'm buying stock. Sometimes I'm selling stocks for a loss right in that first 30 minutes of the day. And then towards the end of the day, if I particularly like how stock is behaving going into the next day, I'll pick it up or I'll sell or whatever the case may be in that last half hour of the day. So from 9:30 to 10 o'clock, don't bother me. From 3:30 to 4 o'clock, I'm locked in. All right. I got to make my decisions for the next day or to close out this current day. That takes us to 8:50 p.m. You should be synced up, set up in this way. We're going to start constructing your watch list in the next video. We're going to start dissecting all the information here on the charts, what these moving averages mean, really highlighting how frequently these moving averages come into play, how to identify support, how to identify resistance. What do these bars mean, right? Each bar is significant. What I'm going to do in the comment section below, I'm going to post you a link to Oliver Velez's video called The Elephant Walk, okay? That is, in my opinion, one of the best explanations for understanding candlestick style charts. He teaches you all the nuances of each type of candle. The elephant bar, the mid-range bar, the doji bar, topping tail, bottoming tail, and that's it. Those are the type of tails that you should be paying attention to, okay? And really, 3 of them are important. The elephant, the huge range bar, the short range flat doji bar is important, and either a topping tail or bottoming tail. Those 3 bars signal with a certain level of accuracy what's going to happen in the next bar, okay? So you need to know those things, and it tells you a lot. It's like an hour-long presentation. I suggest that you watch that between now and our next video session. And after you watch it, go to your Thinkorswim, go into your paper money account, and then you can start looking and comparing what you're learning from that video and visually training your brain to identify those things on the chart. The more you do that, the faster you learn. I look at, like I said, hundreds of stocks every day. I look at hundreds of patterns every day. I trade almost every day. And when I do that, you're working your trading muscles, okay? It reinforces what you've learned. It trains your eye to see certain things, good, bad, ugly, whatever. You're going to be prepared. The more you exercise your mind when it comes to stock trading and technical analysis, the faster you will become proficient in how to identify things. The other side of this is proficiency in self-mastery, okay? It is extremely difficult to accept a loss in a stock, at least for me, right? I like to be right. If I'm making a stock call publicly and it doesn't work out, I'm wrong and I lost money. Double bad feeling. Some people may be inclined to hold things longer just to say, you see, I told you so, I was right. In the stock market, that can evaporate your account, that can kill you, that can blow you up. It happens to traders all the time. That's the hard part, is mastering the self-discipline. If you are the most disciplined person in the world, you wake up at the same time every day, you eat rice, beans, and chicken every single day, and you're like a train on rails, you might be wired very well to be the very disciplined trader. Your weakness may be making decisions, right? I don't like to make decisions. I can't make decisions. Should I buy? Should I sell? I don't know. But the perfect trader, in my opinion, is the educated trader who can see and identify stocks, the disciplined trader who's going to consistently execute on their trading plan, and the trader who's not afraid to lose money, okay? Because you will lose money. If you have this insane attachment to money that I can't lose it, I can't lose it, I can't lose it, the minute a stock starts going against you, 1 penny, 2 pennies, $1, you might exit the trade even though the trade hasn't proven that it should be exited. I have one of my buddies, I'm not gonna put him on blast, but he cannot tolerate the movement in the stock market, and he quit. Not everybody's built for this, all right? But if you're someone who's dedicated to learning, someone who has fair risk tolerance and not too afraid to lose money, and someone who is decisive, you have the pedigree to be successful. After that, it's just mastery of yourself and put in the work in. 8:55, I promised 15 minutes of Q&A, so we're gonna switch over to that now, okay? I'm gonna look through my list and start answering some questions. So Randy asks, do we have to register with a US address? I don't know. Contact the brokerage and explain your situation and figure out what you're gonna do there. I have no idea. So you don't trade from phone and trade from the computer. I will close out, that's a Darius Smith question. I will close out a position on my phone if I'm like driving around and the market's falling apart and I'm just like, whoa, I need to, exit everything. I might put on a trade from my phone, but the majority, I'm executing my trades on a desktop computer. Do I use shorter periods? I answer that. Yeah, this will be saved. What else? So you trade purely on technicals and not fundamentals. The majority of what I trade is technical because in all honesty, the fundamentals will show up in the chart. If a stock is fundamentally strong, it's going to be on more and more institutional watch list, and there's going to be more and more institutional activity, and I'm paying attention to that institutional activity to make my decisions. A stock that is fundamentally trash is going to look like trash on the chart, and I'm not going to trade it. Another thing that I consider is that I do follow somewhat the Cant Lose methodology. But remember, I'm in some positions for 2 days, some positions for 5 days. The fundamentals don't matter to me in 2 days or 5 days. The price action and the volume is what matters to me in that short time frame. If I was looking to hold something for 6 months, which I never do, if I was looking to hold something for multiple months, maybe years, I may be looking at the fundamentals closer. I'm going to be looking at are their earnings growing? Is their profit margins growing? How are they performing, year over year, quarter versus quarter? What is the outlook? What is the PE ratio? What is the PE ratio for that industry? But I really don't care about that. Everybody asks me, do I trade news? I don't trade news. Do I trade rumors? I don't trade rumors. When people ask me what do I trade, I tell them I trade the freaking chart, and that's it. The chart is what's driving all of my decisions. And the chart is going to tell me everything I need to know. It's going to tell me the supply and demand. It's going to tell me support and resistance. It's going to tell me what price I should buy, what price I should enter, what price should be my target. All of those things I'm extracting from the appearance of the chart and the volume and the moving averages and the lines that I'm drawing. All right. So for me, for trading, I don't care about any fundamentals. Let's see what else we have here. Can you explain the crosses? Golden cross, death cross? Man, I don't fall into any of that. Some people, what he's talking about are like crosses in the moving averages, right? Or crosses in like other indicators, like relative strength indicators or volatility indicators, where certain moving averages, like if the 50-day moving average crosses above the 200, you're starting to see a stock turn into an uptrend. Or if the 50-day moving average crosses below the 200-day moving average, it's another major indicator that more downside is to come. Those sort of things are just kind of general rules. I don't live and die by them, and that's not my trading style. Darius has another question related to taxes. I don't know what that question means. Can you expand on it? How do you handle taxes? What is the tax consideration? Just expand. Gains, I'll start talking about what I do know. Gains from the stock market on realized profits. That's because you bought something and you exited the stock and you had a realized profit, you made a withdrawal, whatever the case may be. Your profits are going to get taxed as ordinary income if you own the stock for less than 1 year. So for my trading style, I get taxed as ordinary income on my gains at the ordinary income rate. Now, you could set up your trading account to be in a business name. You could expense out your profits from trading so that maybe you have no tax liability. Consult your accountant for the best strategy on handling your tax problems. But on trading, since you're opening and closing in usually less than 1 year's time, you're going to be taxed at the ordinary income rate, which is a lot higher than the capital gains rate if you were to buy and sell stocks from year to year. Also, those capital gains can be rolled over into opportunity funds and kind of offset your liability that way. So there's a lot of strategies to offset your tax liability when it comes to trading. But once again, consult with an accountant who's familiar with, managing portfolios or managing traders, because he or she will be able to advise you accurately as to what should be your best strategy. One of my buddies, the majority of the funds that he trades are in his retirement accounts. He maxes out his 401k, his IRAs, and takes advantage of the tax benefits that are associated with the growth within those vehicles. Okay, so at some points it's pre-tax dollars going in, so he's not getting taxed on his income, and then he's trading the hell out of it and he's putting up numbers. He's trading it, and all that growth is tax deferred for when he pulls it out at the lower rate of the retired U.S. citizen. Okay. Also, I believe it's the Roth accounts that are powered by tax dollars that when you are withdrawing, you are tax exempt. So the growth that you have in that account no longer is taxed. And there's a lot of strategies that people use to max out their accounts and kind of hedge their income in a way where they put themselves into a lower tax bracket because they're making all of these donations or allocations to their retirement accounts, and then push on their retirement accounts for maximum growth and are able to borrow against it, at very low interest, are able to withdraw, with a penalty, but maybe they've doubled their account, so that penalty is whatever. Also, your companies, if they're matching your 401k, you're immediately getting a double on your money from just putting it in. So if you're able to max out 5% and you put in 5,000 and your company matched you 5,000, they just doubled your money, and that money is in there without any tax liability until you withdraw it, growing for the life of your employment. So as far as taxes are concerned, talk to the experts. So when you take profits, how do you pay taxes? Like you pay taxes at any other point. You pay it at when you file your tax return. So you're gonna have in your tax return your W-2 income, your 1099 income. They're gonna issue you a 1099 as well, or your company, if you're setting up in a company and your company is issuing you K1s for the returns, you're gonna get that money is gonna get tracked. Okay, and the trading platform is going to send you a statement of your earnings and what your liability is. You bring that to your accountant. He files it as the appropriate class of income, and then you're going to have your adjustments based on your particular situation. So if you're trading, automatically assume it's going to be treated as ordinary income, and ordinary income is going to get taxed based on your income level and what deductions you have. Are there any other questions? Because I'm only going to be here for 5 more minutes, and then I'm out of here. So if you have any other questions about setting up your charts, or general stock market questions or general questions for me as far as how I trade or whatever the case may be, feel free to ask now, as I'm only gonna kick it for the next 5 minutes. So I'll be looking at this, and I'll be cycling through my S&P 500 now, just to see if there's anything I really like. Switches over to the dailies. I'm waiting for questions. Like this ADSK, I think I started a position on it yesterday, I'd like to think. I can't remember. But I like the fact that it was coming off the 50-day moving average and then consolidating right on the 20-day. And I felt that as it starts to trade above this trend line, I should start getting some upside momentum. And one other thing I didn't explain was volume. This graph below. Volume is the sample size of the data that you're looking at, okay? It's the number of shares that were traded in that period that you're looking at. So this stock today traded 1.3 million shares. So 1.3 million shares exchanged hands. Volume is important because the movement on large volume days, like on this day, are significant. That means that there was heavy activity at this price point. It usually means that this price point will be defended in the future. As you can see, we haven't traded below this day. This day was also support. It's a pivot day, and the market has yet to trade below it, okay? Oh, not the market, but ADSK has yet to trigger below this high volume day. Significant day, something to pay attention to. A lot of activity on a positive day coming off a trend line is evidence of support. If this stock were to trade below here, I would consider this definitely a failure of this move. I'm playing it tighter to this 50-day hold. So, that's kind of my play on this. I have options on this stock. If this trades below the 50 and definitely gets below here, I will liquidate my options position. And yeah, okay. So Queen Dominique, you're welcome. Karami, thank you as well. Thank you for coming in. If you have friends or family that are interested in stock or have started trading and they're just kind of the Robinhood wildman, you might want to introduce them to this platform, and you might want to introduce them to this, just so that they're sharpening their skills. I'm not saying that I'm Warren Buffett or anything close to that. I just am a guy who's been trading for a long time and have a system that works for me. So I think it's important to know some of the basics, especially the risk management side of things. Biggest loss, I don't know, maybe like, I think 11, 12,000 in a day, something like that. Do I ever trade with margin or with cash? Do you ever trade on margin, or do you just use cash? I always use margin. Sometimes, I'm not in a position that requires me to use margin, so it'll draw against my cash first. But margin, margin is an extent of your money. And when you register to trade as a broker deal with a broker dealer, you could get 50-to-1 margin, which is insanity. Better for day trading, and a lot of the firms will give you 10-to-1 overnight, but that is dangerous. And you really need to, if you're going to be trading 10-to-1, you really need to manage your risk big time. And it's almost impossible for you to properly manage your risk overnight trading 10 to 1. So, I would say be careful trading margin overnight. Intraday, you have way more control. So, margin to me, I don't, it's not something that I really think about. The only time I think about how exposed I am is when I'm holding, multiple large positions overnight and I'm starting to get that regulation T call. Because if I have a regulation T call and I don't satisfy the reg T call, then they kind of restrict my trading activity the next few days and I have no margin and I can't put on new positions. So to me, it's not worth being stuck in that way. So I really don't hold 2 to 1, more than 2 to 1 overnight, unless there's something that's just so working so well that I need to hold it into the next day. I don't care if I'm over leveraged at that time for the platform. All right, so I think that wraps it up. Darius, what I would encourage you to do is, I don't want to sound mean, so this is just me being a blunt ENTP. A lot of great questions, a lot of questions that are irrelevant to your success as a trader. So you need to start eliminating some of the noise, right? Biggest loss, who cares about that, right? Biggest gain, who cares about that? You need to focus on what is going to be your average. My average positive position is a $2,000 to $5,000 gain, okay? Depending on whether I'm in at a half position or a full position. Some gains are going to be 9,000, 10,000. I typically limit myself to less than $2,000 risk on any trade, okay? So my risk is, max risk on any trade is 5% of that size, okay? So if I told you that I'm in a stock for 40K is my full position, sometimes 60, I'll go up to 60K if the risk is smaller. So if I could see and I can calculate where my stop is and say, all right, well, from this point to this point, this is my technical stop anyway, it's only 3% risk. I might go up to $60,000, okay? Because when I lose my 3% on that 60K, I'm still below my max loss of 2,000. If I'm taking an options position, my contract prices will not exceed that 2,000 because that's my average update. And I won't even say it's my average update, but it's kind of like what I target at minimum to start taking profits on a position, okay? And that's if it's starting to falter and not behave so well. I'm like, I have $2,000 on this trade, I'll take that, I'll book it. If it's not behaving very well and showing that there's potential for more upside, or if it's trading directly into resistance and I picked up a 2-day move for 2K or 3,000, I'll bang it out. If the market looks like it's moving into resistance as well, I'm gonna take my profits. So, if I had an outlier gain where I had a $50,000 gain because I held this stock for 3 weeks and it just went on a tear, like AMD or like Zoom or something ridiculous like that, or GSX, which is moving like crazy. If I had that position and it was just ripping and I made 50,000, I can't start thinking that my average day is 50,000. I have to revert back to the mean. That was just a bonus day, right? So it's more important that you think about the average prices. Also, keep your strategy fairly simple. Master 3 to 4 setups. Master 3 to 4 concepts. Don't get caught into, oh, this guy trades the MACD, this guy trades another oscillator, this guy does this. You have to figure out what you can identify best and live there, because it's your trading data and your journaling and your analysis of your performance that's going to allow you to refine what you see well and what you trade well. A million traders are going to have a million different approaches. I'm only going to teach my approach, even if you take one thing from me that becomes part of your strategy, great. When you see the same thing that I see, we both might take the same trade. My buddy who taught me how to trade, there's certain times that he'll be like, oh, I like this. And I'm like, I don't see it. I don't like it. He'll take the trade and make money. I won't take the trade and I won't make money because it doesn't make sense to me. I don't see it. So I'm not going to just trade off of his suggestion. I think that's asinine. I think it's dumb. But from your questions, what I'm seeing is that you may start getting pulled into a lot of different directions. So try to focus yourself up on the things that matter the most. Your tax question is great. How do you get in tax? What's the tax consideration? That's a very good question. But don't get into the hype of the stocks. All right, like the things that people will talk about margin, like, oh my God, margin. Margin is just a multiplier of your money, right? When you're buying a house with a mortgage, you're using margin, right? So is that people are using margin every day to buy real estate. But when it comes to margin in the stock market, it's a problem, right? The reason why it's a problem is because those same idiots that are over leveraged are just practicing bad risk management. It has nothing to do with the margin. It has everything to do with the trader. So that's why certain things I want, anytime I see those questions, I'm gonna call you out on it just to unteach that garbage that gets circulated in the media and other people so that you can be laser focused on what's gonna be good for you as a trader, all right? So don't take it as like negative criticism. Just take it as like me saying, I've seen other traders kind of focus on these things, and those things are just noise and distractions. All right. One more question. I place stop limit orders on all my option trades just in case, and some of my long-term stops. Yeah, that's good. The only thing about stop limit orders is what happens if you have a major gap. It gaps below your limit. What's going to happen? It's not going to execute your trade, and that thing might be in free fall. So I tend to put stop market orders because if my stop got violated, I don't need it running away from me even further than where it is. I mean, a stop limit intraday could work because stocks don't typically skip intraday, but from night to night, you might have a huge gap. And if you have a stop order, that's a stop limit order. And let's just say your stop limit order was $100 a share, and this stock gapped down at 98. Your limit, it may be out of your limit, and then you don't get executed, right? And then it spills over to $90 or $80 or something insane like that, and you're just in this position still. So kind of be careful with limit orders on stops because that can happen. All right, that's my time. Take care. Thank you for joining me here at ENTP Life. If you did enjoy this video, make sure you like, subscribe. Of course, your questions are always welcome in the comment section below. And if you know somebody who's thinking about getting into the stock market, thinking about trading, put them onto my videos, share this video with them. And if you guys want to get invited to Thinkorswim so that you can earn a little bit of money when you deposit funds into that account and help me out, by getting that little $50 commission that I'll get if you open an account, please do so. Just reach out to me, send me your email address, and I'll send you that invite. Maybe in about another week or two, I'll be doing another one of these videos. And that's it for today. Hope you learned something. Hope you enjoyed our time. And that is all, folks. End broadcast.